Greetings, my YouTube family. Thank you so much for visiting my channel. My name is Isaac Jonas. For those who don't know me, I like creating content. I invest as a retail investor in the US and Canadian stock exchanges, but I am a trained economist. So today I'm going to share with you the major highlights of what happened last week. Today is too much. I'm recording this video and I will post it, get it published on Monday this coming week. So I will discuss two main things. Number one, the earnings highlights this past week, and also the economic data releases, and also for this past week and next week, and what I think about these things. So hang on, and I will also put some timestamps so that if you want to jump to a specific section of the video, you can also do that. Now, in terms of the stock market overall, it continued to go up against the expectations of most analysts, and this usually happens. The Dow Jones and the S&P 500, they kept on rallying up, and so that's something that is interesting. But in the earnings front, Salesforce, they did beat the earnings by 1.07% in terms of their earnings per share expectations, and the shares went up on Thursday and Friday by over 3%. Snow, Zscaler, they fell despite beating earnings expectation. They fell by more than 10%, and Dell went up by 32% on Friday after posting very interesting results, and also demonstrating that they're collaborating with NVIDIA, and they are also participating in the artificial intelligence space. So that's the potentially next big thing. I say potentially because we don't know, we will see. I am cautiously optimistic. Now, in terms of the major economic indicators, the Fed's key inflation measure, that is the core CPE, PCE, rose by 0.4% month on month and 2.08% year on year, and personal income, it jumped by 1%, risking potential increase in inflation, which is the increase in price is measured at a given time. And then the spending, it also went up by 0.1% versus the 0.2% gain that was forecast by analysts. And also the Chicago PMI fell for the third straight month in February. And also the GDP quarter on quarter, it came up positive 3.2% versus 3.3% forecast by analysts. So what it means is the US economy it's growing, right? This quarter, it actually grew the latest quarter by 3.2%, which is good. It's an election year. And then the initial job claims, they came higher than expected, somewhat, 215,000 were reported versus the 209 that we estimated. But now this week, on Monday, the ISM non-manufacturing prices will be released. A reading of 50 means that the non-manufacturing sector is expanding. So which is a good thing if the economy is growing, and businesses will be growing. Now, on March 6 and 7, Jerome Powell, the Fed chair, will testify in the state of the monetary economy and also monetary policy. And also on March 8, that is on Friday, the non-payroll and unemployment numbers will be out. So what do these numbers mean to me as an economist or as a retail investor? Number one, I don't try to forecast the direction of the stock market, right? Or even businesses that I invest in the short term. So what I do is I look at the fundamentals, and I understand that, let's say, for example, now the personal income, it jumped, and let's say the Fed, if they feel that they might risk acceleration of inflation, they might potentially, act accordingly, maybe increasing interest rates, policy rates, and that might increase the cost of borrowing. So what that means is, if you're investing on speculative stocks, what that means is the cost of borrowing might be high, and if they are making losses, therefore the stocks might potentially decline if their cash flows don't increase. Again, I look at the fundamentals. So what I do, I invest in fundamentally good companies once they drop to my intrinsic valuation level, and I just invest in exchange traded funds. Once they drop, I just wait. I just have to be patient. Right now, the stock market is measured by the Dow Jones, S&P 500 benchmark. It has been going up and up, and my expectation is that it might retrace when I don't know. and I know there are experts who say it might go up. It depends. Let's say those the big money flows, they keep on buying shares and buying shares. It's going to potentially increase, because what happens is the market structure, how it works is that there are buyers and sellers, right? If there are more buyers and than more sellers, what it means is the demand is going to increase, right? It's going to push the shares of those particular securities. Let's say those big money guys, they are buying shares for Apple, right? What it means, they are going to push the price up to a certain point, regardless of whether it is overvalued or not. So on the short term, it's very difficult to gauge. But what I'm doing is I'm keeping some cash, like I said, and I also like to invest in other non-correlated securities to the equities market that is not related to the stock market, like the stocks and equities. If the stocks go up or they drop, as measured by the S&P 500, they can potentially increase. So I look at the exchange traded funds that track the volatility index. Some people may consider bonds, and also some people may also consider gold. For me, the way that I like to invest in gold is looking at the exchange traded funds that track the gold. So that's the way that I look at it. But right now, I was looking at the exchange traded funds that trade gold. It has been up. So I like to buy when things go down, with the expectation of selling when it's up. So that's it for today. I hope you find this helpful, and may the market be with you. If you would like me to share some other insights, please drop it on the comments so that we can do that. I hope you find this information insightful, but this is not investment advice. Investing is risky. You must always do your own due diligence. Have a wonderful day. Thank you so much, and I'm checking out for now.